99% of traders don't fail because of a bad strategy. They fail because they can't follow a good one. I'm going to talk about the 5 psychological mistakes that most ICT traders make. Welcome to the ICT series with Dom to Bomb Trades, and this is episode 7. All right, guys, the first pillar of psychology we're going to talk about is revenge trading. I'm sure you guys have heard it. You've probably experienced it before. It's a nasty habit to get over, but you will get over it if you keep trying. So, everyone says they'll never revenge trade, and then they'll lose a massive size, and then they'll get in. So it's going to happen. I honestly, to be completely honest, get it out of the way because I don't know one trader it hasn't happened to. It's just one losing trade becomes I'll make it back, then another loss, then double size, then the entire day is ruined. And honestly, to be completely honest, I'm going to show you what I did today. So I had a pretty green day, but I made some very amateur mistakes, very amateur. So this is the perfect day to go over episode 7. We had liquidity to the downside, but ES was breaking all-time highs. We had a massive 1-minute inversion at 9:39 this morning. I usually don't trade at 9:39. Usually I try to wait at least till 9:45 almost. But, we got this huge candle that was totally disrespected and formed an IFEG and a break of structure. I had a strong feeling that we were going to continue higher, came back down, went back up, and then you see what happened here. So to tell you where I went wrong at is I had my stop loss here, okay? And I had a pretty good trade going. I see this down candle where I thought maybe, hold on, I'm going to sneeze real quick. Sorry. I thought maybe this was just grabbing more liquidity, but really what happened was we were in a chop. Okay, we were accumulating. So on this FEG, I went from 1 mini contract or micro to 2 micros. Now I'm 2 micros deep. Okay, the risk size isn't a lot for my account, but I shouldn't have went for another micro. That didn't make sense. It was very odd behavior for me. I'm disappointed. So even though I had a green day, a really green day, it just was very sloppy. It was a sloppy execution, and that bothered me. So that's kind of like revenge trading almost. You take a trade, it's not going the way you want, and you get deeper into the trade. Now, any other day, guys, when I was starting out, I would have lost this trade, right? Which I did. I lost this trade, but I was only 2 micros in, and when I would have lost it right here where it broke market structure, I would assumed that okay, we're gonna still come back up, and I would have got in even more down here to make up for the losses, and tried to gain something and lose my account. Now, I've been trading for a long time. I don't do that anymore. I understood that the market was slapping me in the face a little bit, and I was listening. So that's what we talk about when we talk about revenge trading. The market doesn't know you lost money, and it does not owe you a winning trade. So the next thing is FOMO. This also happened to me. Although, like I said, I've been doing it a long time. I don't jump in anymore, but I took this market structure shift, and then what do we have? A 1-minute FEG right here with, I took this market structure shift. I'll actually paint it out for you guys. Right here, we came back up, we came back down, reversed this FEG, And then at the break of structure right here, I got into a trade. I which was pretty much part of my rules, but this would have been my last trade for the day. My target were these London lows or Asian lows. I can't remember what these were. And I got in at the break of structure. We came back out and draw down a little bit, went back down, came back and draw down, and then really knocked it out of the park. I hit these. I had three contracts sell right here, and I had another one I just gave up right here, which was good because my take profit was right here. So we really made a good profitable day and canceled these bad trades out. But like I said, the execution was terrible. Now, FOMO. This is probably the biggest killer of ICT traders. Price runs, you missed it. Instead of waiting, you convince yourself it'll keep going. I could have just been like, man, this thing really dumped at 1150. I want to keep going. I want to keep going. So right here, let's say I enter in on, I'm green for the day. I got away with a sloppy execution in the morning. This FEG isn't turning. Let's say I get in right here with my stop loss being right here. And I want to take it down to where it ended today, which was right here. That's insane. Let's see what was right there. Actually, I have some points drawn out on this map. Oh, absolutely nothing. It just literally dumped perfectly. So what would have happened was I would have been 4 trades deep. I got FOMO because, wow, there was a little bit of money left on the table. I want to go all the way down here. And instead, I would have got stopped out, guys. I would have got stopped out and lost money, and my positive trade would have went negative from making up for these negative losses. It's a disgusting habit. You have to have rules. And speaking of rules, these are basically mine that I still follow till this day. This is on my wall right in front of me. 2 morning trades max, 1 afternoon trade max. And then stop if your day is over $1,000 realized gains that I press click and it's over 1,000. Just take it and go. And then I have an automatic stop no matter what if I lose 1,000 on the day. So those are my rules that I follow every day. I did take 3 trades today here. I don't really trade the afternoon anymore. I just do 9 to 12, and then this was still within the same trade. I just added a contract. So really it was still 2 trades max with no loss. So don't convince yourself it's going to keep going. It's not. It's going to do whatever it wants to do. It doesn't care about you. You need to just care about your model and your strategy. The next one's over trading. This is what we talked about up here. I had this 1 minute. We inversed it. I wasn't happy, and I was like, I think I can add more contracts. I know where this market's going, blah, 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 blah. And if you saw my pre-market analysis, I actually wanted these draws on liquidity down here. That's what my plan was. I didn't even follow my plan. I just assumed the market was going to keep pumping because of these. We're in this weird time frame of all-time highs right now. So I didn't follow my strategy. So how many trades do you actually need to make money? You probably only need 1, maybe 2, guys, maybe 2. Most ICT setups happen once or twice per session. You're not going to get them every time. It's pretty boring. And once you come to the realization that you're looking for your model, you're waiting for your setup, and it happens every day, or some days it doesn't, and it starts to become boring, that's when you know, like, okay, I'm getting somewhere because I'm getting bored. Good traders wait, average traders force trades. And I was pretty average today. Besides this one, I wasn't mad about this because we came down into a 5-minute FEG. But this was such an average move right here. Adding on a contract size, you're getting rejections up here. I don't know. I was upset with it. And then that leads into position sizing. People increase size because I'm confident it's going to go back up. I was confident that we were going to keep pushing higher. I've won 3 trades, why not? So it's like I lost 2 right here, right? And then I win 1, And it's like, if I would have just FOMO'd and went back in, oh, I'm already up $600. I might as well. That's ridiculous. That you have no rules, no discipline. And that was me. That was me. I would be up $600 and be like, there's still more market left to get rinsed. And then I'd be down 600, just like that. This setup looks amazing. There's setups all day sometimes where I'm like, oh man, that was a great trade. But this is my rules, and this is what makes me profitable. And then people who don't have rules are unprofitable. They might have 15 trades in a day, when the person who just made 2 morning trades and an afternoon trade is up way higher, less stress, and probably at the gym by the time they lose $2,000 on the day. So, position size. Let's keep going on that. I used one micro right here, MNQ. I used one micro and added one micro because of my risk management. I wasn't really sure about the size. Now, I lost this trade. But since I only used 2 micros, I still had some, bullets left in the chamber here, that I knew where we were going with this market for sure at this point. I loaded 4 contracts up, and then bam, I hit a home run. So if I would have loaded 10 micros here and another 10 here and lost, I probably would have literally lost thousands of dollars and not been able to take my third setup. Contract size, position size is very, very important. And I know, as traders are, they got big egos and they think they can take on the whole market and, start trading minis, like 5 minis. Guys, it's okay not to have a $10,000 day as a new trader. It's all right. You're going to make more money in the long run if you focus on the trade and being passionate about the execution, and not worry about position size or money. Position size should never be based on confidence. It should always be based on risk. The professionals survive first and profits come second. Professionals survive first, profits come second. That's I can't say it any better. Journaling. That's pillar number 5. Okay. I don't like to journal. I love TradeZilla, and I think they have a great software. And now they have AI where you can, you put all your trades in, and then AI starts to realize, hey, dom to bomb trades, you're losing, 90% of your trades from 9 a.m., 9:30 to 9:40. Statistically, you should be like, okay, I'm not going to trade between 9:30 and 9:40. I lose 90% of my trades during that time frame. That's what journaling can do for you, especially in a time with AI. It's unbelievable. These things weren't around. I had How to Trade for Dummies when I started. That's how, booming this stuff is getting right now. And so I'm not really good at journaling. I don't like putting my trades in. But what works for me, okay, if you don't like those things either, is I will talk to somebody about it. I'll talk through it. And like in the beginning, when I was writing things down on journaling, you can pick anybody. They're not going to understand. No one's going to understand. If you have somebody in your area that trades and you guys talk, you are one lucky person, okay? You guys should be able to take over the world because you have each other. But you can pick anybody. They don't know what you're talking about, but what it does is it helps you go through your trade for that day, okay? Patterns appear quickly. You maybe lose every Friday and not notice. And then when you start talking it out, you're like, oh, you know what? I lose on Fridays a lot. I should stop doing that. The biggest reality check, if I gave you the best ICT strategy in the world, would you actually follow it for 100 trades is the question. Not changing any rules, no revenge, no FOMO, no moving stops, no double sizing. And if the answer is no, the strategy isn't your problem. Okay? The problem is your psychology. So hopefully you take something away from that, and then I appreciate you guys coming to the charts. All right, guys. I want to say one thing. Everyone's tried something new in their life. They figured it out, and then they got good at it. So the same with trading. You guys can figure it out. The hard part is your psychology. So this week, I want you to try something different while you're trading. I want you to take fewer trades, reduce your position sizes. Go to NQ if you have to. Go with the micros. We got nanos coming up. Nanos is a big thing. Journal or speak out loud what happened with your trade. Okay, so if you have somebody you can talk to that doesn't, they might not know what you're talking about, as long as you're getting it out of your head of what went wrong or what went right that day, and cut your losses. So cut your losses. That's what risk management is for, which we're going to talk about. Risk management. Risk management keeps you alive. And then if you can just combine that with psychology, your mental process through the day or through the trade, it'll make you unstoppable. So the market isn't testing you guys. It's not testing your strategy. What it's testing you is if you're disciplined. And that is the hardest part about trading. I promise. If you can overcome that, you will be better than 99% of the traders out there. I appreciate you guys watching. Like, follow, subscribe, check my other channels out. I got a lot of cool things coming up for the rest of the year, all the way till December. Can't wait to have you guys. And we're going to make every single one of you guys profitable.